Good afternoon, everyone. We are going to get started here with our September 2025 SG REOT Unitholder update webinar. We obviously have been doing these consistently and as much as possible to continue to update and relay the information that we discuss in our GP and trustee meetings and any other strategic information that we can share with the unitholders in our efforts to exit these projects. As always, we are recording for those who cannot make the meeting live today, and we will PDF this document as well so it's in the records with the portal, on the portal, as well as emailed out when Mary sends out the follow-up communication this afternoon. A couple little things. First and foremost, it is Truth and Reconciliation Day in Canada, so we would ask that you recognize that all of our lands are involved in some form of recognition for those who fostered those lands before us, and we would ask that everybody take a look at what today means to them and take that moment to recognize the day. Second, and more specific to communications, we've had a few people over the last little while, a few unit holders, not many, who through some way of, and not likely their own fault, they would either blacklist our email address, or they would remove themselves from the email distribution, and then subsequently not be getting information, which includes getting statements, which includes getting any tax information, which there hasn't been anything lately, so it hasn't been a problem. But if we do move forward with a transaction in the near future, it is important that people that you try not to click unsubscribe on some of the update emails or information that's coming specifically from Mary from her address. Anyhow, just keep an eye there. And if you are speaking with anybody or in your group, obviously, if you're watching this, you're already getting the information. But for people who may not be getting information, we always have Mary to communicate with and make sure that your information's up to date. So there's that. Nothing has changed as far as our structure. We've maintained the same group at the table and continue to put our efforts towards exiting each of the properties that we unfortunately still own. None of us want to be in this position. We all want out of these properties, and we're certainly not alone across the country. We have many projects across the country that come to a complete stall over the last 18 to 24 months. A lot of that to do, of course, with the ongoing issues in the internal economy in Canada, but of course, a lot of external pressures from the US and trade war issues ongoing. Our financials and our oversight that we go through every year as still services provided through Central Business Services in conjunction with BDO and our legals for Robert Graham and Scott Elijah when we need opinions. Again, there has not been a lot of activity, so there's not been a lot of need, but we do go through an annual audit, and we do pay a substantial amount of funds out to BDO for that audit every year. So it's both something that's necessary, and it's also something that is costing us some money every year to continue. So we want to stop that cost. We want to eliminate those costs. As far as progress in the projects from the last time we spoke in the spring, if you're following the news, and I don't mean to sound dismissive, but if you're following the news, there's nothing happening. There's just there's no good news in the real estate cycle at the moment, unless you are a real estate investor who has mounds of cash and you are making lowball offers to properties for those properties that are underwater. And in that area, maybe some people are picking up some good deals. But for the most part, builders, developers, real estate investors, and the end the end purchasers of investment properties are not doing anything. And that has certainly stalled across the country, and specifically in markets that we're in Ontario. So our Gantt chart here just showing as it has shown last time that obviously Elgin Street and Goderich is long gone and sold, and the other three properties in some shape or form remain for sale. Hamilton property as a whole, Ingersoll's property as a whole, and of course Southampton is property as a whole, and of course Ingersoll with three remaining houses that we still have on the books because the purchasers could not qualify to finance their own mortgages after they purchased it. So we still have those, and we will get into those project updates. I'm going to cover the financials as usual in a fairly quick format. There's nothing to hide, nothing to show. We had a cash reserve that we have been, the term is burning through as we cover costs every month. And you'll see that reflected in our balance sheets where our cash positions are getting lower every month, and that's reflected there. There's very little income that comes in because we're not an income generating properties. We do have some rent on some of the houses, and that does come in. So we do see that income coming in. But in general, we do not have income. So you'll see a short statement of cash flow, a short income statement if there is any, and of course a balance sheet. Again, these are all for your review and discussions at the end when we do our Q&A. The big message right now is this market is not moving. It's costing us every month and things that nobody wants to hear. But I'll pause for a second there to reiterate that we are here. We are here to make sure that we deliver the message, that we openly communicate good news or bad news. And we would much rather be here delivering some good news on an offer or some kind of movement on a property. But that's not what we have right now. What we have today is management. We are managing expenses and we are managing timeline as best as possible and minimizing any expenditures and any work to ensure that we can keep these properties in front and center to hopefully attract the builders or developers when that market starts to reopen. So again, with Ingersoll, we do have some properties rented, so we do have a short income statement that will follow, I believe, on the next page. Here it is here. Some of the rent that's coming in and the expenditures to go out. We are in a loss on those properties in every year because it costs us more to carry those properties than we can bring in rent at the moment, especially based on current market values. And then, of course, in Hamilton, the same thing. We have a small amount of cash left over, and we have some debt we service on both those Ingersoll and Hamilton. So we are in the process, of course, of making sure we find alternative solutions, of which the main one is to liquidate properties. And Brett and Randy will talk about that more in our update section. So that's the financials in a nutshell. They're there to reflect on. They're there to ask questions. They are there to review now or at a later date. And certainly, as always, if you get to the end of the presentation and your question wasn't answered, or you just want to reach out, absolutely reach out to Mary. She will set up a time. She will coordinate to make sure that the right people or the right person is on the call if you do need to have a one-on-one situation. It is always best to submit those questions by email to Mary. That way we can be prepared and have the answers to more specific questions. The general questions of hopefully today we are going to pick up some of those and you'll be able to review that on the recordings when we're done. So with that, we're going to transition over to the updates, and then following the updates, we will open up for the Q&A as we have done in every other webinar. So Brett and Randy, we will hand over to you. I think we have to unmute you from it looks like there. So Mary, if you can unmute them, I'm trying to find them. There's one.
Thank you.
Thank you.
There we go. So the floor is yours, guys. Go ahead.
Yeah.
Yep.
So if you want to skip ahead to our next slide, Doug, we can get right into project-specific updates and move forward with the very, very little project-specific updates there are. Right now, we still have the 3 units in Ingersoll that are owned by the SG REOT. They were all rented out in the beginning. There is now one tenant that has moved out. So any progress happening there. It's just a little bit of tidy up and touch ups on paint and whatnot to get it back in a top-notch condition. So that's
So
what.
with the units there in terms of the sale process, so we were prepping for sale when the tenant moved out. It was basically go time. We did not want to have a tenanted property listed. We felt that to maximize our sale price, it would be best to have that vacant. So they had given us notice, lots of notice. Pretty good tenant, actually. And so in preparation for that, we were going to get these properties listed. At our last meeting, we talked about, a list price in and around that $899, $849. That was based on, a couple of comparable sales in the Ingersoll area and surrounding. Then we had an appraisal because we had to redo the financing, and all the appraisals came in. I think it averaged out at around 800. We had one at 795, one at 805, and one at 810. So all pretty close to that 800 mark. And so we realigned our potential list price in and around that 829 mark, because this was one of the ones that had backed onto the golf course. You could see it there, so unit 9. So right in the middle at the back. Nice deep lot backing onto the golf course currently. And yeah, getting ready to sell. Unit 5 there came up for sale by one of the previous purchasers, and they had listed it at $799. So again, in line with what we were looking to sell at, a little bit low, but anyway, they came onto the market beforehand. I had reached out to that realtor to see what the market was like. Didn't really hear back, but that's fine. And 60 days into their listing, they dropped their price to $739. We're now 30 days after that, and it has not sold. So in doing that, we basically stepped back and said, okay, if our competition can list at basically call it $100,000 less than what our list price was and not sell, it's not prudent for us to list it right now. So we're waiting till it is off the market to get that back up and listed, seeing what the result is, and then playing it as it comes at that point. So if they end up getting the price that they're looking for, then we can evaluate if we're going to list it. If they're still well shy, then we got to put it back up as a rental. We don't like locking ourselves into residential rentals because again, you're looking at a time frame of a year, and then you basically have to sell it if they don't give notice with the tenant. And the only people that can buy it without assuming the tenant would be people who are physically moving in. So there's certainly, you don't want to shrink your market, so you just have to be cognizant of that. So we just it's not a great situation, but we've got the other two tenanted currently, and working within those parameters. Yeah, so that was the game plan, not really what we're at. Yeah, Hamilton. So we're members of a couple different home builders associations, and we are talking directly to builders, if not on a daily basis, then it feels like it's pretty close. Just trying to gauge what the feel is for builders right now, and a lot of them are scared. They've got monthly overhead costs that are not being kept up to with pre-construction sales. They're afraid to put shovel in the dirt for any spec homes. They're really reluctant to buy anything without, getting a feel for being able to immediately turn around and sell it. In the past, this particular property had a lowball offer on it, and that's sort of where we felt the market was in terms of who was coming out to buy these sorts of things, and that was people looking to just give lowball offers. And the way the offer was written, with a number of clauses that pertained to assignment clauses, it was evident that the people, even with their lowball offer, had zero intent on closing it themselves, that they were simply offering it at a low enough price that they'd be able to, in turn, flip it to somebody else. And if they didn't, they weren't going to close on this anyway. In speaking to the rest of the general partnership and conversations with the trustees, we're certainly open to looking at lower offers. And, if that comes with dropping the actual price on the listing to try to entice people, but just based on the level of market activity, we just have to be cautious that, you start dropping that price too aggressively, but it's still not even noticed in the marketplace, because there are power sales out there. There are people that are just trying to liquidate, get out even pennies on the dollar of what they can, and we don't want to negatively impact the unit holders' equity so dramatically by taking far less than we feel that this is worth. So we're just being cautious with being too aggressive with selling this. Again, somebody came with the right offer that we felt was legitimate at the right price. It will certainly be entertained. But any of the listings that we have in terms of dealing with builders, it is not for lack of being in front of them and trying to entice any type of offer. So, next property. So again, this property, we continue to take on different discussions with builders, either in the area or that would have to come up to the Southampton area. The true benefit of this particular area is its proximity to Bruce Power, which is an employment generator in a province that has seen unemployment rates rise right now. So we're still bullish on the area. Again, it's just getting builders to pull the trigger, and it's they're all reluctant to do so, just because they're not getting the pre-sales that they're looking for. So again, Randy's been out pounding the pavement on that one. I've been certainly out talking to anybody and everybody that'll listen about how wonderful the area is, but it's just finding a buyer. So, Doug.
Oh, that brings me back to there. Any other comments, I guess, on the three of sand project breaks? You've covered a bunch of points there, Randy. And is there any other? I know Southampton, we had the
I
draft
think
plan extension.
so we had the draft plan extension that was brought up at the previous meeting, that it had been applied for and it was approved and extended for 1 year. We asked for a 1 year extension to 2026. So I'm guessing that was done on June 3rd, which was just after our meeting. Where we talk about allowing up to a triplex, so the dark orange at the bottom of the picture, yeah. So those 15 lots, So they could be 15 single families or a combination of single family, duplexes, triplexes. So we were really pushing this to the real estate investor market to take advantage of some of the programs through CMHC, the MLI Select program that I think some of our unit holders might be familiar with, just if nothing else, have heard of, where it's really promoting that long-term rental. So somebody can come in, and if they have a mix of singles, duplexes, triplex, you're buying a property with 98 units, and in terms of long-term rental, it's a great area to do that, and taking advantage of some of the financing options through CMHC that's available, because you can have some affordable units, you can have some accessible units, which was important to us. The stacked towns are designed such that the main level can be wheelchair friendly, so accessible. But in terms of proximity to Bruce Power, you're 20 minutes door to door, depending on who's driving, I guess. But it's a great spot for that type of rental, and in an area that is, well, I don't think there's many areas in Ontario that don't have a need for rental, but certainly as a project, it fits. But in terms of ready to service, so we've got the property basically where the just listed. This is an older slide from our previous presentation, but across the street, they are developing that as well. And so we've been, if we service the road, there's going to be some cost sharing there with the adjacent property. We'd rather be first to market with that in terms of units for sale or for rent. But in the long term, there's going to be some cost sharing to get money back for any of the servicing that's done. But it's the development agreement's done and ready to go, and everything's approved. So it's one of those that are truly shovel ready.
And for our unit holders who, we've said this over and over again, it's kind of, old hat for them that we've had these properties. This particular example that we have in Southampton, being not just an area where jobs are created, but it's also a lifestyle that people very much sought after, to moving now away from larger city centers. And I think that's what most of our unit holders and real estate investors are seeing in the news now, is this vacuum that's happening with the condo prices in Toronto capitulating on themselves with the overbuild of condos. And I don't think it's changing people's feelings that they would like to move and have their last home someplace that has a better lifestyle, that has maybe access to one of the Great Lakes, or is on the waterfront in Hamilton, or on the 401 and the golf course in Ingersoll. I think those people still have the desire to go there. It's just that nobody, including probably everybody in this call, is making any large real estate decisions right now, be it individual homeowners or builders. Everybody's just watching the headlines to see if we're going to get, out of this mess that we have from from what's being presented in our trade war, what our prime minister now is gallivanting from country to country, trying to stir up better partnerships and better deals, all of which is going to take more time. And time, obviously, in a private investment is not something that our unit holders ourselves have much of in this project right now, as we've seen other projects just get taken right out because they've run out of time. So we're not hiding the fact that this is a point in time where we have to turn to pivot. We have to start to go back and knock on the doors, as Brett has said, very clearly knock on the doors of any firm or any company that's given us even the most ridiculous drive-by offers. A drive-by offer meaning they've never papered anything. They've just simply said, "Oh yeah, I'd buy that for $1 million." We have to go back to them and now start saying, "Are you really interested in it? Do you have a real offer?" And push hard to see if there is anything under all the stones that we've already turned over. So we've got to now dig a little bit deeper than what we've dug before. And it's not that we are doing that at this point in time because we feel we haven't done it in the past. It's just that we have to keep going back no matter how hard the uphill push is and how much people are sitting on the sidelines and been at their cottages all summer, as far as the developer, business owners, real estate investors. Eventually, they've got to get back to work. And we've heard some indications from builders where they are saying, hey, you know what? I think I'm going to have to build at a slightly lower margin to keep my people working, which we've talked about that in the past. That's an important trigger that we need to see in the economy. And we've seen some reduction in construction costs, which does then translate to housing prices in the broader market starting to drop. So there's that. Now we're going to open up the questions, I'm sure, and have a very, a full set of questions as we always do. And then we would ask that everybody just put their questions into the chat, and we will address each as we can. When we run out of questions on the chat, we'll wrap up, and as we've stated, we will get this recording out to everyone. And in the interim, on the slide, last slide here, while we have our Q&A going, you will also take note, and please pencil these into your calendars. And that includes my GP partners and my trustees. So December 9th at noon is our next scheduled webinar. And then May 12th, 2026 is our next scheduled webinar after the December, which also would serve as our AGM. So again, there'll be no emails that go out with those dates in advance for links or anything until we get to about 7 days or 14 days prior to. And as I always say, this does not limit communications. We are not putting these dates out there and hoping that, we don't have to talk to anybody between now and then. That's completely the opposite. We hope that there is information coming in either by way of market change or government policy change, or just sentiment changing within the real estate investor market, and our properties become, subject to an offer or some kind of any movement, and we would then communicate that directly out and call a webinar. So if we need to call a webinar in November, we will call one, or in the end of October, we'll call one. But barring any information, new information, barring anything that we can't address with you using our trustees that represent you, we would come back on the December 9th. So let's get into the questions. I see one question just popped up there. Got a few questions actually popping up, so I'm going to need some help from everybody to just keep an eye on that chat there. I got a lot on my screen, so I sometimes can't see them all. But let's just start with the big one. I see the one we get this question pretty regularly. How much of our capital are we looking at now? So over the last 2 years, we've gone from hoping to, hit the markers of a 10% return to a zero return to about an 80 to 90% return on of capital, which would be in addition to the 16% return that we had given previously. Um, just reiterating the price of a property, on MLS doesn't really mean anything. It's just a place marker out there to tell people, hey, here's what the property is available. Everybody who comes and looks at property knows they can make an offer, which we do get some of those drive-by low offers. So in consideration of the fact that we have no data to tell us what the low price is, like where is the market low that would sell a property, we are speculating. We're guessing at the very best. So at this moment, if we were to sell the properties at a reasonable price for Southampton and for those Ingersoll three homes, and for Hamilton, we're in the neighborhood now of the 60 to 75% of original investment that we'd be able to recapture on the liquidation. That again is very contingent on things just stagnating, staying in the state of stagnation that they are right now. If the market can improve at all in the very, very near term with some announcements, maybe we can stabilize and get into that 70 or 75%. And that's in addition to the 16% that was already returned. It's bleak and it is what it is. And I wish I had better outlooks. But here's the thing with math. If one of your variables is unknown, it's always a guess. And that's where we stand right now. We don't know. if we get this question quite regularly, why not just dump the properties? And believe me, if somebody had offered us a real valued offer on paper, signed, with a closing date, you would know. You'd hear about it. Our trustees would be looking at it, and we would be giving it, top priority consideration. There is just nothing on paper that's come from any of these people. A lot of tire kicking and just nothing on paper. So, guys, just jump in and take a question there.
Randy responded to the first question about the property across on the other side of, I guess, south side of Spence
Randy,
Street.
maybe just answer the question, and we can.
Recap the question first because it's I don't know for the video for people that are watching this after.
Yeah, yeah.
So it was just
It's
asked how it compares to our property and if it's somebody new or if it's something that sat for a while and is just moving
Sorry,
forward.
I'm. Can you just frame that? What are we talking about?
The Spence Street property. So there's a property across the street that Brett mentioned in his development update that is going through the development process. It was purchased by a group several years ago. Um, it is a larger piece of land, but it is not zoned residential. It was zoned for a trailer park originally. It had um, some issues with it as far as archaeological concerns and stormwater concerns. But I guess they've been working through that. They did submit an application to the municipality and county, and I believe it was December of 2023, but it has not really progressed much further than that. But as per my answer, we've been working to reach out to the owners and the engineers working on the project to find out more about exactly where they stand with that, because that would be a key indicator to be able to tell a potential buyer as to when they might be able to expect some cost sharing on that road. As far as direct comparable, they are looking at doing some single family residential along the street the same way we are, but there would be a lot more infill because it's a larger property. And then Brett, are you able to address the Hamilton question?
Yeah, that property adjacent to our own on Beach Boulevard in Hamilton. It had gone power of sale, and we had done some research there in terms of um, who was offering it for, like offering the individual units for sale, um, and they had not registered those with Terrion, so they were actually working outside of the rules that Terrion set forward to offer those units for sale. But ultimately, it's, I think, good that it draws attention to the area. And ultimately, if somebody else comes in and buys that one and they're looking for property to purchase, they'd be happy to buy both.
Okay, I'm not seeing any. I don't think I'm seeing any other questions here. Do we? Again, I just ask you guys to take a look there. Do we have any final thoughts, Brett, Randy? Do we have any final recap, and we'll wrap up.
To me, the big key right now is to at least focus on moving one of our larger properties in order to eliminate the debt that we currently have. Carrying two mortgages or a collective of mortgages between the Ingersoll properties and the Hamilton properties. If we can either sell Hamilton or Southampton at a level that would eliminate that debt, it buys us time and eliminates that monthly outflow of cash, putting us in a further negative position, which at least buys us some time in order to hopefully see a bit of a correction in the market. Maybe sell those Ingersoll homes at a higher price and also have a builder gain interest in one of the properties that we still do have at that point unleveraged.
Yeah, and I think that's kind of goes to the exit strategies. There's no limit to any scenario that can come forward, and selling either Hamilton or Southampton as a standalone to someone who's been tire kicking and possibly wants just to, you know, give us a sub price on paper. certainly takes all the pressure off and allows us to buy some time, which is what this entire economy and this real estate market needs. And unfortunately, we need to get through what looks like until the after Christmas and see what the world's going to bring us. In the near term, though, I would stress to our unit holders that doesn't mean that we change our efforts from one property to the other. We are still looking aggressively for Hamilton and Southampton. The Ingersoll houses are a little more difficult. I think the example that Brett went through there with Ingersoll, when you have somebody who, picture this on your own street. I've said this in other presentations before. If you live on a fairly controlled street and someone, you consider your neighbor puts their house up for sale at, 50 to $100,000 lower than what you think your house is worth, it's not the time that you want to go pound a sign into the ground and basically play the game of trying to get to the bottom. So Ingersoll, we can try to go below and get to the bottom. Um, but we just don't, I don't think that's the right thing that we want to do. And of course, we haven't decided on that. And on that note, decisions do come with our trustees' input. So there'll be trustee meetings, following this meeting, that would then review all of our findings in the last month, as we do every month, and make decisions on behalf of unit holders. If they feel those decisions cannot be made as individuals trustees meeting, as the five trustees or the two independent trustees, three independent trustees, pardon me, then that will require us to go back to our unit holders and have a vote, which again would not be done by calling a meeting on webinar, be done by paper with a webinar to follow up to answer questions. Okay, with that, I don't believe any other questions. And oh, there's one right there. I'm not sure if I followed that question from Elizabeth. Anybody else interpreting that 2020?
Yeah, so it's not broken down into independent LPs. It is one whole package, I guess, if you will. So all three of the properties, and we are going to return capital as soon as we can. The expectation was certainly that we'd be wrapped up and divested of this already, and for that, I will apologize that it's not done. But as the properties sell, you will receive capital back.
Yeah, I guess just again to explain further, there were distributions out of Ingersoll as those houses were being sold, and then we had the stagnation of disruption from pandemic, and then later the interest rate drop where we could no longer sell the houses at a profit. So we were distributing, and of course that was halted. Like every other project, everything's been halted for distributions. The other question that just popped in there, I see it, and Brett, you answered Century 21. I just want to preface that, Century 21 is the listing agent, but our packages for this property as well as the property have also been circulated with our Toronto contacts through John and I, and also through contacts that we have at Cushman Wakefield who have these properties as well. So just so you're aware again to understand that in the background realtor groups, Century 21, Cushman Wakefield, these companies have deep databases. A lot of it crosses over. A lot of it is, the same builders, same developers, same people, investors on those lists. However, the power of distribution is getting the message directly to these people. The power of the listing on MLS is a place marker, in my opinion. It just tells people, yes, this property exists, and here's something in this, area you're looking at. So on top of the listing, we do have other agencies, other contacts that have distributed and put this out to their investor base. And I'll tell you, and I don't want to take up too much time, but it's mathematical. It's really straightforward. It doesn't matter if Century 21 sells it and gets a commission of 4% or 5% or gets a commission of 2%. Nobody cares at this point. Everybody, including the agents and the brokerage houses, just want to move forward and get business back on track because right now nobody's making any money with no transactions. So there's no fighting about, oh, it's my listing. I'm not sharing this stuff. It is 100%, all out kind of information distribution warfare. Get the information in front of as many people as much as possible and have thick skin because there's a lot of no's out there at the moment. With that, I think we're done with our questions. I'm going to just I think I'm just going to wrap that up. We've got it 12:42, so we'll stop there. I appreciate everybody joining us. I apologize that we don't have much more information than we have. If there's anything else, we will again follow up with our messages in the near future, as well as this presentation will go out and the links will go out for the hard copies to the portal, to the original portal you signed up through. And we thank you for your time.